So you took it there and you bought there above the $5 to $6 levels, and now you're wondering whether or not you should cut your losses and walk away from it, or should you hold on tight. Now, in today's video, I don't got a dare for you, but I do offer you the truth. With that said, today's video is going to have three main segments: the why, the what, the where. The why, we're going to be doing a catalyst breakdown. The what, we're going to be doing a stock analysis. The where, I'm going to be telling you guys where to get in, where to get out. So without further ado, let's talk about the why first. Why do we talk about the why first? We talk about the why first specifically for tickers that have already had massive moves, in order for us to anticipate whether or not there's any longevity and sustainability to this move or not. Because if there's no sustainability to the move, then we end up getting a chart pattern like this, right? Double top, death, okay? So let's get talking about the news. So the news was actually pretty big, right? The news was pretty big. It does have a lot of potential. So it says a positive interim phase 3 results highlights potential of ovaprene novel hormone-free contraceptive. Now, if you guys don't know, right, contraceptives, they do a lot of bad things to the female hormones, okay? I know I sound like a little kid talking about that shit, but I'm not a scientist, all right? But I do know that, you know, it does mess with the female hormones, right? It makes them gain weight, it makes them be moody, it makes them this, it makes them that. There's like 1,001 articles, right? There's 1,001 YouTube videos about how, you know, the scent of their partner, they're no longer like it. It's pretty crazy. It's pretty crazy stuff, okay? So although to a lot of you guys, they might be like, oh yeah, contraceptive, oh yeah, that's just sex, kids having sex. It's a pretty big deal, okay? It's a pretty big market, pretty big deal. And if, in fact, if they can come up with a hormone-free one, that could be massive. So right away, we're gonna go over here and we're gonna put the catalyst as amazing. Okay, that's pretty amazing. That's pretty amazing news, right? Now, next things next, we're gonna talk about the company's volatility. So the company has a sub $50 million market cap, making it extremely volatile, right? So we're gonna put it as there as well. Now, the next thing we want to talk about, now that we figured out the catalyst, right? The next thing we want to talk about is gonna be the stock, right? The stock analysis. Now, the stock analysis somewhat overlaps with the company analysis, but it's not really exactly the same thing because, as always, right, the stock is not the company and the company is not the stock. In fact, a buddy of mine who is a pharmacist, and this is a cool story. A buddy of mine who's a pharmacist. A couple of days we were talking, and he was saying, "Oh, this new company. Well, not he didn't say new company. I'm just saying verbatim. He said this company is making this drug, and you know, they're working on this vaccine and everything like that. Oxygen. He was talking about oxygen. Okay, he's a pharmacist. All right, he's heard about oxygen. He's heard great things about him. Oxygen, ticker OCGN. Now, I had to explain to him that oxygen is probably one of the worst stocks in the history of the universe. Okay, it sucks, guys. All right, I mean, and when I say it sucks, I mean like it really sucks. Okay, it really freaking sucks. Right now, why? Why does it suck even though the company's good? Because of their treatment of how they treat their stock, right? A lot of these companies, what you need to understand is that the way that the relationship with their stock is an ATM, okay? Is the same relationship as you have with an ATM. You go to an ATM, you put in your card, you get money out. That's it. That's how they treat it, right? So they're looking at their stock as a way of just siphoning money out. Now, how do they do that? Whether it's through public offering, direct offering, or just, you know, warrants here, warrants there, over and over again, okay? And I'll be honest with you guys, I think the red that we saw over here, the red that we're seeing over here, this landslide of red, this avalanche, has to do with the company going in and diluting. So what do we analyze for next? The next thing which we analyze for is going to be whether or not the company is going to dilute or not. Now, dilution, right, where it's the company going to mess with the supply, public offering, direct offering, whatever it may be, right, comes down to three different things. The motivations of the company, okay, their accessibility to go out and dilute, so them having the, you know, opportunity to dilute. Then their history of dilution, right? Historically speaking, how much has this company diluted before? Is this a company that we need to worry about dilution or not? Now, the first thing which we're going to discuss is going to be their motivations. What's a company's motivations? Cha-ching! Money. All right, so let's talk about money. So when it comes to money, Dare is broke, okay? Dare is pretty broke. They got total cash and cash equivalents of $3.9 million, okay? Now, you guys may look, $3.9 million, that's not broke. I wish I had $3.9 million. Well, do you wish you had $3.9 million if every 3 months you were burning through $5.47 million? Right? If your bills every 3 months were $5.47 million and you only have $3.9 million in the bank, do you really wish you had this? No, you don't, okay? Because they only have 2.1 months of cash left on that. So, financially speaking as well, weak, okay? So we're gonna put that as bad. Now, next thing we want to talk about is gonna be their history of dilution, okay? Massive stuff. Historically, they haven't diluted that much, which is good. It's very good. However, right now their overhead supply is massive, meaning they do have the opportunity to start diluting right now, right? Now, when we go over here and look at the Dare chart as well, right? This is a company that has had a fair share of dilutions, okay? This is a company that has had a fair share of dilutions. Now, listen, was that a long time ago? Yes, and I guess, you know, the past 3 years, they really haven't diluted that much, but I wouldn't be surprised if they're diluting right now. It wouldn't surprise me if they're diluting right now, especially based off of the price action, which we're seeing right over here. I know a lot of people want to say shorts, a lot of people want to say bears, a lot of people want to say hedge funds, blah, blah. But I'm telling you, man, this type of selling of shares, majority of the time, it's internal. Okay, majority of the time it's internal. This price action which we're seeing over here, allegedly, don't sue me, okay? So for me, the probability of them diluting right now is actually pretty high as well, so we're going to put that as bad. Now, let's talk about institutional ownership. So when it comes to institutional ownership, the company has 9.3% of institutional ownership. We'll just say 10%, we'll be nice, and we'll say that that is okay, all right? We'll say institutional ownership is okay. Now, next thing we want to talk about is going to be shorts, okay? Short interest. Let's see what the shorts have been doing when it comes to Dare. So the past day, the short interest on Dare is up 46%, 48%. That's not a good look. The past week, it's up 55%. That is not a good look. That's not a good look at all. Remember, when shorts add to their position, that means that the stock is overbought. That means that they believe that the stock is expensive, okay? So let's talk about Dare. Now, listen, the thing about stocks like Dare, right, which are highly volatile and, you know, highly unpredictable, is that you really just want to be playing them early in the mornings, okay? You really want to be playing them early in the mornings unless you're short, unless you allow the ticker to actually establish some levels. This chart right over here, this is probably one of the ugliest charts I've ever seen. It's true, right? And I'll be honest with you, I called this move right over here, right? We actually bought this dip in our community at $7 and sub $7.50. If we go this morning, I sent out this alert in the morning. Listen to what I said.
Dare is likely going to go ahead and give us a double top at around the $10 levels. This will likely happen in market open. Now, where is it going to drop to? Could it potentially drop down to the $7 levels? That's possible. I would be a buyer sub I want to say 750-ish. I'll be a buyer because I do see it going ahead. Look, it's easily going to test this 8.80 level, so I wouldn't even mind honestly picking some up right now, but then more likely than not, it will give us a double top at market open.
Okay, bang. And guess what happened? It didn't give us a double top at market open. Look where it gave us a double top, right? It gave us a double top at 9.15 instead of market open, okay? Right over here. Now, some would say, oh, this is not a double top. These tops are different. Well, I beg to differ, right? Because remember what I always tell you guys, right? Support and resistance is a range, okay? It is a range. So, you know, it going to $10 and this going to $10.40, you're really going to try to argue with me that it broke the $10 levels after it did a fake breakout and then it got absolutely destroyed, freaking demolished? No, you're not going to say that, right? So let's talk about this now, right? Can it recover? And of course, if you guys saw, right, we did end up, we closed a third of our position at 8.2, another third at 9.5, and I did actually end up closing out the rest of there at 7.4 as well. Okay, we ended up closing at 7.4, which was honestly an amazing call. I think it was a really underrated call. I didn't get enough praise for it, right? Because if you look over here, right, we literally closed it out on, I think it was one of these candles where like it just bounced back up and it tested the 7. It went to 749. If we can get the 1 minute candle over here. There we go. Look at this. So it came all the way down to 660. We held. And then it came back up to this level over here at 749. And we closed it at 740 for a third of our position, right? Now, the other third of our position, we did end up selling it at 8.2. And then the other third at 9.5, which was very good for us. But yeah, you know, we locked in our profits and we walked away. So for me, though, let's talk about where is this ticker heading from here now. So for me, I could see it coming up here and testing $5 again, but I don't see it breaking above $5. Unfortunately, I don't. And if it breaks $5, I think the top is going to be 6. Okay, it's going to have a lot of trouble getting above the $6 levels, right? Losing is part of trading. Okay, let's talk about this now. Losing is part of trading. I get it. You're depressed now. You heard what I said. Oh, yeah. I mean, the common reactions. Oh, he doesn't know anything. He doesn't know anything. What does he know? He doesn't know. He's just a guy on YouTube. He doesn't know. I read a guy on StockTwit say, well, let me show you how much I know. Okay, I know enough to have an 82% win rate after almost 500 trades later. Okay, so I know a thing or two. All right, month of July, no red days yet. Month of June, 1 red day. Month of May, 3 red days total. Month of April, no red days. So I know a thing or two, right? But this doesn't mean I'm always right. And don't take this as I'm always right? Because at the end of the day, even with an 80% win rate, 20% of the time I'm wrong, that's 1 out of 5 days. There are 250 trading days in a year. That's 50 days that I'm wrong. So I could easily be wrong about Dare, and Dare could easily jump back to freaking $10. But for me personally, I don't see it getting above this $5 to $6 range. I just don't see it. Okay? I don't see it. Call me crazy. I don't see it. Right? Now, with that said, my friends, if you guys are tired of losing, okay, and you want to start making some gains back in your portfolio, I got good news for you guys, okay? Start locking in, okay? Just start doing things differently. And what does that start with? That starts by joining our community, okay? That starts with joining our community. You get to trade alongside me every single day. You get to get alerts from me, day trade alerts, swing alerts, option alerts, lessons, one-on-one access. We already have over 400 members coming back month after month. And the reason why they're coming back is because they're making money, okay? They're making money. So give it a shot. Maybe pause it and read some of these, man. You know, people are, like, we're truly changing people's lives, right? I mean, read this right over here, right? Thank you so much, bro. Thank you. I appreciate you. And, you know, maybe pause it and read this. Other than that, thank you, making greener. We've been checking out. So give it a shot, guys. The link is in the comment section and description. Anyways, I appreciate you guys. I wish you guys the best of luck. 7-day free trial, 30 days money back guarantee for the community. And one more thing as well. Right now, we do have a sale. It's our biggest sale. The next 10 people that join, 50% discount, okay? Now, I'm saying 10 people. There could be less spots available. Just look at it. That's all. Thank you for watching. Happy listening trading. Your boy, Sam from Top Academy.